But Becky, of course it's political, and we can talk about shipbuilding, we can talk about solar panels. It's perhaps beneficial to the shipbuilders in Korea and otherwise. So if it is all political, and I'm not suggesting anything otherwise, what are we going to see in the form of China being able to, and this is what I was really getting at, to absorb that supply? Because it's not like, EV sales are going gangbusters right now in China. It's not like we are seeing this consumption story really playing out. Does that mean that we should have an expectation that we are going to see even further stimulus to that effect, because it doesn't appear like the EU and the US are backing down anytime soon?
Exactly. We do expect additional stimulus in the foreseeable future. For example, if we look at the April Politburo Committee meeting, which sets the overall economic policy stand for the second quarter in China, it's clearly an upside surprise. So the urge for maintaining relatively strong fiscal impulse, and at the same time specifically urge the start of issuance of the ultra long dated special bonds to boost domestic consumption as well as infrastructure as well. So we have already seen the announcement of the special bond issuance yesterday, and the time span is fairly long, across 6 months from now. So that means China is very keen to step up the economic support at this stage, although we still do not see a mega stimulus or something like a bazooka. It's anything in the table yet, but we do expect additional stimulus in the foreseeable future.
Got it. You're also seeing more downside for the currency. You're saying 730 for end Q2?
Yes, our current forecast for dollar CNY, it's at 730 by the end of the second quarter. However, we do see some risk for actually a downside rather than a upside risk from there, because we have seen the Chinese authorities, it's very decisive to keep the currency stable at the current stage. So if we need spot to go to 730, they basically need to move the official fixing to 715, yet they are keeping the fixing very sticky at 710 to 711 level recently. But from a seasonality and interest rate differentials point of view, we do expect continued depreciation pressure of the CNY in the second and the third quarter. But such a situation might change towards year end into November, December, when the Chinese exporters are squaring some more of their FX positions. And that's again due to another seasonality factor, which is turning around towards the end of this year.
When do you see domestic demand recovering in a meaningful way? Not like, up 1 month, down another, but in a secular trend. When do you see that sort of recovery?
We do not expect a very sustained, strong recovery of domestic consumption anytime soon. So in the short term, we do look for a cyclical upturn of China growth, as what we have been seeing in the PMIs, and a improvement of external demand through exports. But in the medium to long term, before the end of this round of the real estate sector adjustment, before the end of this round of local government debt adjustment, it's quite unlikely to see a very strong push to the domestic consumption, particularly on the back of the geopolitical risk as well as tariff risk. We could see the Chinese authorities continues to emphasis in the manufacturing sector and leaving not enough room to support the domestic consumption sector. Yet ultimately, we still see that the most sustainable and reliable factor for China's next phase of growth, if we talk about next decade or 2 decades, it has to be domestic consumption. When we look at the Chinese domestic household consumption as a percentage of GDP, or even when we just look at Chinese GDP per capita at only 18% of that of the US today, it has to be the most sustainable driver in the medium to long term. But unfortunately, that may not be a biggest driver in the short term.